The day that PTRA announced their bankruptcy, the stock actually rose 20%. PTRA stated that the bankruptcy petition aims to maximize the value of its business and enhance the potential of each of its product lines. The company wanted to sell one or more of its three businesses to stay afloat.
New this morning, electric bus and truck maker Proterra says it's seeking Chapter 11 bankruptcy protection from a federal court in Delaware. The California company.
At the time of this writing, the stock is currently trading at 6 cents. It was suspended from the Nasdaq and is currently trading over the counter. But how did we get here? Let's take a look.
Electric buses make up less than 1/10 of the fleet in the municipalities in the United States, and yet it would seem to make so much sense for cities to use electric buses more. Why is it taking so long for adoption rates?
Well, I think what you're seeing is we're at the very beginning of the adoption of a new technology, and so by definition, it is a growth market. You're starting from a few years ago. We had 0 battery electric buses on the road in the U.S., but just last year alone, we did 25 new city deployments, and this week we did 2. We did Philadelphia, the largest electric bus deployment on the U.S. East Coast, and we also launched the first all-electric transit system where a brand new transit agency in the U.S. formed around battery electric bus technology. So we definitely feel like we're staying very busy, and there's a tremendous amount of growth. But the overall market is so big that, as you point out, that it's going to take a lot of buses to really start making a dent in our fossil fuel-powered bus fleet.
Is there an urgency to go public at some point? I mean, you've been around a long time and you're clearly up and running and you have sort of first mover advantage in a lot of ways. Do you need to get out there in the public markets?
Well, in some ways, it's an easier market to be a late-stage tech company than it's ever been before. I think there is an interesting dynamic that companies are trying to be very thoughtful and patient about approaching the public markets. I think the bar is higher than it's ever been in terms of what's expected of a public company. If you think about 10 or 15 years ago, there were pre-revenue Silicon Valley tech companies that went public. I just don't think that's the era we're in. And if I think about even the sort of the opening headlines that came ahead of our conversation, it is a wild, volatile world out there right now. So maybe we're overly optimistic in thinking some of that will settle down, but you certainly want to wait for as much of the market and the volatility to calm down as possible.
Mr. Popple, good morning. Guy in London. How much of your manufacturing and as an OEM or your supply chain manufacturing is done in Mexico?
There's some of our supply chain that comes through Mexico, and I think that's typical for a North American automotive manufacturer. Over the last 10 or 20 years, a lot of supply chains have been set up in Mexico, especially for labor-intensive components. For our company, though, about 70% of our production content is U.S.-based. And as a young company, I think we've been smart in terms of focusing on our core market and not getting too complicated in terms of a global supply chain. For a smaller company, I think less complexity is better. But it does affect us like any other manufacturer out there, and the biggest thing that we hope for is just regulatory certainty. As you're well aware, it can take years to set up a supply chain. It's hard to turn that on a dime.
Where do your batteries come from? And if there was a limitation imposed by China on rare earths, would that impact that battery production?
So we build our batteries in California. We have the capability to buy basic energy cells at the commodity level from pretty much anywhere in the world. But because of the public transit aspect of our market and the regulatory framework in the North American market, a lot of our content has to be domestic. So in some ways, we're better insulated than I'd say most EV companies from changes in the global supply chain.
You were one of Tesla's first employees as well. What can Proterra learn from Tesla's recent challenges?
You know, I think not just Tesla, but really any company in the technology space, staying focused is incredibly important. That growth is hard, and if you're in a new technology space, you're dealing with industrial growth rates that are above and beyond anything you'd see in a conventional industry. So the biggest thing that not just our alumni from Tesla, but any tech company we try to keep in mind is do one thing better than anyone else in the world can do it. And if you're confident in your product and you're confident in the size of your market, don't spread yourself too thin. I think that is typically how technology companies, once they've had their initial successes, get themselves into trouble.
Of course, government funding for rebates and U.S.-based production incentives are likely to remain, so long as President Joe Biden retains power. His Infrastructure Act provided a wide range of funding to various sectors, and those funds will continue to be allocated over time as the country looks to build out its much-needed infrastructure.
Well, you're making a big difference, man. You know, we have a lot of catching up to do, but we're going to be in a position where we ought to own the future here. We ought to be the single most significant suppliers of electric buses and vehicles in the world before it's over. Right now, we're running way behind China, but you guys are getting us in the game. You guys are getting us in the game. It's going to make a lot of difference.
Some are calling PTRA the so-called canary in the mine with respect to other government-financed EV projects failing. I believe PTRA is one of many to come. Thanks for watching. Subscribe. Please like the video.